Welcome back to our Money Talk series where we are having conversations about money that actually matter. Now, before we get into today's episode, just want to remind you of our tax filing checklist. This is a completely free resource for you that will help you get all of your files organized and ready for tax season. Taxes can be a very, very stressful time. And so this checklist is here for you to make sure that you are putting your best foot forward when preparing for your taxes. So make sure to head to our description to download. And without further ado, let's get into it. Question for you. Have you done your 2025 taxes yet? And if not, we definitely have you covered to make sure that you are able to put your best foot forward when filing your taxes this year. Today on the Unbreakable Business podcast, we have Dawn Patton, who is the CEO of Patton Co. And she joins us on the show to give us the best tax strategies for 2025. I love the way that Dawn just broke down all of the tax strategies that we can implement into our business because she overall just made it really easy. And so if you are somebody that is wondering how to best prepare for your taxes, this episode has you covered. Now let's get into it. Hello, Dawn. Welcome to the Unbreakable Business podcast. How are we doing?
Oh, we're doing great. Thanks for having me here.
Well, thank you for being here because this is not our favorite time of the year. For me, it's not. But, now I'm not as stressed about doing my taxes, but you were truly doing the Lord's work. So thank you for being here.
My pleasure.
Yes. Okay. So one thing I think is just so important for us to just really kick off this conversation is just obviously 2025 taxes. I think it's so important for us as business owners just to always be prepared and just know, despite I have somebody that do my taxes, but I always like to know what's going on.
Yeah.
And so can you walk us through some of the common tax mistakes that you have seen businesses currently doing?
Yeah. I mean, you just mentioned one there is a lot of times, okay, you mentioned two there. So let's break it down.
Okay.
One of them I feel like is doing taxes yourself, like not having help. So you mentioned you have someone who helps you. Great. Because when it comes to entrepreneurs and taxes, entrepreneurs, we're so used to like bootstrapping and doing everything ourselves, right?
Mm-hmm.
Taxes should not be one of those areas. I'm sorry, empowerment to entrepreneurs everywhere, but like taxes just change so much and there's so many like ifs and buts and domino effects and things that change that I'm like, just don't mess with that yourself. Outsource it. Find someone you know and trust and like can get along with to outsource. You don't have to settle for someone who you feel like talks down to you or someone you don't get along with. Like shop around,
Mm-hmm.
I'm right here, but shop around.
I love that.
And get help with taxes.
Mm-hmm.
And then the other thing is when you do get help, don't just bury your head and like, okay, I have someone doing it. Now I'm going to check out of the process because it's just as important for you to like meet with that person and go through it. Otherwise, it's like doing it yourself. Like there's going to be mistakes that are made. The person who you're hiring to do it doesn't know your business as well as you do.
Mm-hmm.
The person you hire to do it will have insight that you'll only gain if you have a conversation with them, talk through taxes with them. So outsource, but don't like totally check out is the tip there.
I think that's such a good point because I feel like that's kind of how I used to be. And then now that I hired my tax guy, he absolutely like says that to me. He's like, no.
Mm-hmm.
I love him because he really does hold me accountable because money is something that and I think as a business owner, it's gotten a lot better as the times have gone on, as the years have gone on. However, it's truly something that I'm still deconstructing, like my relationship with money. And so like, there'll be times where I just like feel like, you know what I mean? But he's just so wonderful. And I now ask him a lot of questions just to make sure that I understand, even of like always touching base of like, how much should I be putting away? Like very common questions. And what's really nice is even with Honeybook we have these like tax saving buckets that make it so much more easier to where like you can be proactive in your own way where like when you get paid it splits your money up into like how much you need to save and stuff like that, which is absolutely has been a game changer for me because again it makes me more proactive and really helps benefit that relationship to where again I'm being proactive, I'm also making his job easier. You know what I mean? And then I'm also too being much more aware and much more confident in my own business. So I absolutely love that you shared that. I think I want to bring this up again because I asked this last year, and I think it's a really important thing for businesses to know. We have sole proprietors, LLCs, and S corps, and I know like a lot more advanced business owners, they start to transition into S corp. I think let's talk about the tax advantages for each one. Specifically, start with sole proprietor and then move on from there.
Sure. Okay. So you mentioned sole proprietor, LLC, and S corp, right?
Yep.
So these
Hmm.
are like single owner business entity structures. If you have a partner, you're going to be a partnership instead of one of these.
Hmm.
When it comes to a sole proprietorship and an LLC, tax wise, those two are exactly the same.
Hmm.
So there's no difference there. The difference is a legal thing where an LLC is like protection from your personal assets. And it's saying, hey, my business is separate from my personal assets. So if anything were to happen in your business, they couldn't go after your personal stuff. Vice versa, anything happens in your personal life, they can't go after your business. So
Hmm.
tax wise, though, all the same tax advantages of a sole proprietorship and an LLC. And when it comes to that business, it means that you're filing your taxes on your personal tax return. So it's one tax return that you file. You're just showing your business is like a stream of income. Like if you have a W 2 or a rental property or a business, it's all right there consolidated onto one return. If you have a spouse, they're there on that return. Dependents, they're there on that return. It's everything.
Hmm.
Now, when you get to an S Corp, you have to be an LLC first before you can be an S Corp. And an S Corp is legally still going to be an LLC, but tax wise, you're telling the IRS, hey, I know I'm an LLC, but instead of being taxed like a sole proprietorship, I want to be taxed like a corporation. And so you are like approaching them asking for this tax designation. And an S Corp is a little bit different. We don't recommend it until annual profits. So, like the money that's left over after expenses is at least $60,000 or more.
Hmm.
Because what happens with an S Corp is you still have all the same tax write offs as that sole proprietorship did. But now, as an S Corp owner, you have more obligations, and it it can be a little nuanced if you don't have cash flow to support this, because you now have to be on payroll for yourself. You're going to be paid like an employee and the business owner. So you're still going to take distributions like transfers from your business bank account to your personal bank account. We'd call those distributions. You're still going to take that, but you also have to be on payroll and get a W 2 from your business and report how many hours you're working like any other normal employee does. Um, and then you have to file a separate tax return as an S corporation. So if you're hiring someone to do that, an extra fee comes with that. Or if you're doing it yourself, some extra tax knowledge to know comes with that. And then, like I mentioned with the payroll, okay, are you paying for a payroll system? There's extra fees to come with that. But the S Corp can save you money on taxes if you're over that $60,000 threshold.
Hmm.
If you're under, you're going to be doing all this extra work with no tax savings, and it's going to be more expensive for no reason. So when it comes to like tax write offs, you can write off the same thing in both companies.
Hmm.
One is just for the people who are earning more, and one is for the people who aren't quite there yet.
I love the way that you broke that down and just really simplified it. And I wonder for business owners, if they are at that threshold, right? What are some other, like, where I'm like, okay, what are some other
Yeah.
markers to indicate that they are ready to file to become an S corp? Because it sounds like even just like, okay, sole proprietor LLC, it seems pretty simple enough, right?
Hmm.
And like really straightforward, which is great. But I do know business owners as well who are like contemplating, like, there's been conversations of like, do I become an S corp? Do I not? So obviously, if they're already hitting that benchmark of over 60,000, okay, there's one. But are there other markers as well that business owners should be looking at to where like they know that they're ready to transition to an S corp or not?
Yeah, wonderful question. So
Mhm.
you have that benchmark, and that's kind of like the trigger to start looking at an S corp and
Mhm.
see, okay, should we do this or not? Now, the other thing is you don't just want to hit that $60,000 benchmark once. It's like this is what we're projecting for future years. We're going to
Mhm.
hit this or even more in future years,
Mhm.
because you want to stay above that threshold to see the tax savings. And then a big one is the organization and cash flow. So we're going to look at your finances and say, Okay, is cash coming in consistently enough where you can be on payroll? Or is that just going to be this giant stressful burden and you're never going to have cash for payroll because it all comes in 1 month and you spend it all in that same month or something?
Mm-hmm.
Um, and then really just, do you want this extra, the extra burdens that come with being an S corp? Is it worth the
Mm-hmm.
tax savings to you? Now, I recommend for anyone who's at this threshold, go meet with a tax accountant who does tax strategy, and they'll be
Mm-hmm.
able to compare being a sole proprietorship or being an S corp and what tax savings look like, because you might not have any tax savings yet. And then the answer is no, don't do it.
Yeah.
But if I were to compare for you and say, oh, you're going to save $10,000 this year alone, plus every year going forward, yeah, it might be reasonable to you to go through that extra work and the extra hassle of all these things to be an S corp.
Oh my gosh, I love that so much. I think that's such a great, like, I just have loved the way that you've broken this down and just simplified a lot of things where it just feels like it's a lot more doable. But I think that's a great point of like, okay, really talking to a professional as well to really look at your business because again, every single business is different. And I think
Yeah.
that these are really good markers to look at of like, okay, do I need to transfer over or not? I think naturally for us as business owners, I know for me personally, scaling is a goal of mine. It's something I'm in the very beginning stages of doing. I know there's several other business owners, and I think this is important even for business owners who are not there yet, because again, this episode is going to really give you the foundation, right, of how to make sure that you are taking strategic steps in your business. And so for business owners that are looking to scale,
Mhm.
and what are some of like the challenges that you've seen that's holding them back in terms of like keeping their taxes in check and stuff like that?
Okay, I'm going to broaden this to more than just taxes and bring it up to
Yeah,
like finances, because
please.
you
Yes.
you had mentioned this before, but money mindset. I
Mhm.
think that's one of the biggest hurdles or blocks, or I would say opportunities to tap into to scale, is working
Mhm.
on that mindset. Specifically about taxes. When it comes to taxes, I see a lot of entrepreneurs stuck in this mindset of, ooh, I'm going to buy this because it's a tax write off, and I'm going to spend my money here because it's a tax write off. And they're so focused on getting those tax savings that they don't realize they're hurting their business growth. They're so focused
Mm.
on saving a penny that they're not like earning hundreds and thousands of dollars more. I
Mhm.
personally, I would rather make 10 times more and have to pay 10 times more in taxes, because that's still more money in my pocket. Like, you're only paying a
Mhm.
percentage to taxes. Let's say 30%. Okay? 30% goes to taxes. Every dollar more than you earn, then that's 70 cents that you're saying saving, like
Mhm.
for yourself. So work on your money mindset. Don't be so focused on paying $0 in taxes that you hold yourself back from making money.
Mm.
Um, and then don't be so, I mean, in that same breath, like, don't be so scared of taxes and bookkeeping that you don't look at your finances to help you scale. Because a
Mhm.
lot of times entrepreneurs will tell themselves this story of like, well, I'm not a money person, or I've never learned. And they stay stuck there instead of taking time to learn and get comfortable with their money. Because if you take time to analyze what your bookkeeping is telling you and look at your income and look at your expenses, look at where you're making money, where you're spending the money, look at your ratios for different revenue streams that you have, different project ideas
Mhm.
that you have. If you have a team, um, like what is, like what's their profit ratio, kind of a thing. All these things, look at your money and it will tell you what you need to do to scale or where you need to tap into to really help you out.
Oh my gosh, I love that so much. And I love how like you were talking about the money mindset because that's something too, like even as a business owner for me, I think a lot of us naturally, whenever we're doing our budgeting or looking at our money, like we're always like, okay, like like natural, it's a natural instinct. Everybody does it. Doesn't even matter if you're an entrepreneur or not. A lot of us will be like, okay, what can I remove? What can I save?
Yes.
And it's so funny. I was just talking to my sister about it yesterday. And I was like, oh yeah, I'm doing my budget and this and that. And she goes, oh, you're like looking like what you're gonna save. I was like, no, honey, I'm looking at how much more money I need to make. Like that. And she
So,
was like, oh yeah, that's like a good, and I was like, you know what I mean? And that's something that like I have literally have done that shift. So like I don't feel restricted. I don't feel afraid. It's like,
mhm.
okay, if I want something in my business or even my personal life, instantly I go from not what can I remove, but how much more money can I make so that I can be able to attain that.
I
1000%.
love that you've made that shift. That's the exact same shift that helped me scale my business, or
Hmm.
helped with my personal finances too. When I sat down to do budgeting with my husband and we're like writing where we spend our money, and he's like, "Okay, so you really need to start spending less." I'm like, "No, no, no. I just got to start making more." Like,
Hmm.
I'm not spending less. I'm sorry, but I can make more. I'm an entrepreneur. That's why I started my business, was so that I could have control of how much I make.
1000%. And I love, and I think that's something that we need to remind ourselves because I do think it takes some deconstructing,
Yeah.
transitioning from a 9 to 5 into entrepreneurship because we're so, and it's nice having that steady paycheck, you know what I
Oh
mean? But
yeah.
also too, for like, I think a lot of us as business owners, it's really easy to get caught up in that because again, it's a natural thing. Everybody does it. But again, like you are a business owner. So if you want to make more money, you can make more money. You know what I mean?
Hmm.
There's no ceiling. Like there, you know what I mean? Like so you can go as far as you want to go and make as much as you want to make. And I love that. That's just such a reminder of like, okay, even with like your taxes and savings, like the more money you make, like that's a good thing. Yes, you're going to give more away, but how much is that going to really benefit your life with the money that you're making? How much more of an impact are you going to be making? And so
Yeah.
I absolutely love that. A question I want to ask you is as, your business grows, at what point do tax strategies change, right? Like, do you have any advice on building a team to just kind of handle your business evolving in that way?
Yeah. So in the beginning and all throughout, I guess, basic tax write-offs are going to be there for you. So it's going to be things that you're already going to spend your money on in business, like your office supplies, education expenses, if you have contractors or team members, um, home office, just like basic tax write-offs will always be there for you. As you grow and scale, kind of the more money you make, the more opportunities for tax strategy that you have. And
Mhm.
it's interesting. It goes hand in hand with this conversation that we're having about like, Kate, the mindset shift of I'm not going to focus on what I can cut. I'm going to focus on making more. It seems to be, we see this trend with our clients that our entrepreneurs who are making tons of money aren't so focused on the tax savings, but it's okay because we're there for them and we're trying to think through it for them. It's our
Mhm.
entrepreneurs who aren't making a lot that are like, okay, I want a $0 tax bill. What can I do? What can I invest in? And all these things. And they're so focused on just keeping their tax bill at $0 that they aren't focused on like that growth and that income. And it's interesting because there aren't actually that many tax strategies for entrepreneurs who are under, I would say it's usually like 80,000 to 100,000 in profits per year. That
Mhm.
okay, now we have cash to play around with. Now we
Mhm.
can add a bit more tax strategy to this because a lot of tax strategy you have to it takes money to save money kind of a thing. And so you
Mm.
have to have extra cash that you're willing to invest in investment accounts or invest in there's a few different tax strategies, but you got to spend money to save money, sort of a thing. And so, long story short, I guess what I'm trying to say is the more you earn, the more opportunities are available to you.
To save, which is so
Yeah.
interesting. Like the more opportunities are available to you to save. And so I
Hmm.
think again, it just really goes back to that foundation of that money mindset of like, don't limit yourself, right? Because the more money you make, the more opportunities you have to save the money that you're trying to save.
Yeah, exactly.
That is, I love, and you said it way better, like much more shorter and punchy than I did. But like that is just such a good point because I never viewed it that way. And so if you're listening to this, I hope you're like, I hope the wheels are turning. I hope you're like in a weird way excited to do your taxes. And I hope you feel
Yeah.
much more despite and if you have help or don't, like I just hope that you feel a little bit more confident.
Yeah.
So
Well, sorry, one more
oh
thing that just came to
yeah.
mind that I want to say is when you're in and I don't want this to come across like I'm saying making less than 60,000 per year is like a little income because the fact that you're just coming up with this idea out of your head and starting a business and making it out of thin air and making your own money is incredible. So if you make
Yes.
$1, I'm celebrating you. If you make two, celebrating you again. Like, it doesn't matter how much you're making. So I don't want anyone to hear that. But if you're under that $60,000 benchmark that we keep going back to, focus on your foundations. That's what I would say to that. Because when you scale, this goes to everything in your business. When you scale, you're compounding every single thing.
Mm-hmm.
So when it comes to bookkeeping, when it comes to taxes, money mindset, all of these things that we're mentioning, focus on your foundation so that as you grow, they're not becoming even bigger, glaring issues. It's like, okay, I already have kind of set up the foundations for that. So don't hear me out and say like, oh, Dawn said that I don't really have to worry about tax strategy right now. No, Dawn said focus on your foundations right now and focus on doing the bookkeeping, making estimated tax payments, working hand in hand with an accountant, learning how to ask questions and be vulnerable to learning this new concept, new ideas, talking about money with someone else
Mm-hmm.
who knows money. Like, these are all new things for all of us as entrepreneurs.
Mm-hmm.
So build those foundations right now, and that's the focus.
Oh my gosh, I love that you brought that up. I think that's so important because it's not like, I just love that you address that because I know all of us listening to the show are all at various
Yeah.
degrees of our income, right? Like we're all in different spaces. And I just love that. I think that's a really good reminder, right? That it's not to shame people of like who's making this amount of money. It's just, again, like this knowledge is power. And
Yeah.
so the more knowledge that you have, you can make a lot more strategic decisions. You're a lot more prepared. And most importantly, you feel a lot more confident about the decisions that you're making. And so I love that you brought that up of like being vulnerable, asking questions, especially if you have that person that you can go to or if you can't find that person. And I can guarantee you that some business owner knows somebody, right? Like
Yeah.
that's how I found the person that I have, is because I literally asked for references and then found him. And so if you're somebody that's trying to find somebody to help you, definitely ask your business friends because somebody knows somebody. So absolutely love that. So let's talk about write-offs because me,
Okay.
I'm like, it's a write-off. Anything.
Yeah.
The person who does my taxes, he used to call me all the time. He's like, that's not a write-off, Akua. I'm like, it is in my mind. So I know, like we hear the common ones, right? Like, of course, your office or, if you have an apartment, like the certain square footage, or,
Yeah.
typical things that we hear. But are there any misconceptions? Because I already have one in my head that he told me was not right. And I was like, okay.
Tell me about it. I'm too interested to like
Okay,
go on with the
well,
conversation. I got to hear this one.
okay, first of all, I was going to an event and I can't even remember what it was. Well, first of all, okay, hold on. Let me backtrack. I was at an event this past weekend speaking, and one of my friends, okay, so you're going to be like, you guys, please don't think I'm doing illegal activities because I
Oh,
am
I'm
not.
not judging. I love thinking outside the box when it comes to
Okay,
tax deductions.
so we were looking at like, obviously we have speaking events and of course costs add up when you're
Yeah.
going to travel to speaking events. They do. Like I definitely have invested in, clothes and, make like those things. So we were looking at this really cute, you're going to be like, girl, and people are going to be listening to like Akua. It was where you can rent purses, like
Oh, yeah.
high
Okay.
end purses. And I'm not a big purse girly, but some of these were like, I'll rent this. And it was very
Yeah.
affordable, like $100. And then you just have this like membership where you can rent these high-end purses. And I was like, oh my God, like I would go to a conference with this. And my friend's like, yeah, she's like, oh yeah, we can like write this off. And I was like, can we really? Can we write that off?
I would say in your situation, probably not.
What?
Now, because it's really just like it doesn't help your business at all, right?
Okay. Yeah.
It's not necessary. It doesn't help your business. If you're one of the examples I like to, or mindset shifts I like to do is say, if you had an employee and they came to you and they said, Akua, can you reimburse this expense? You'd be like, I'm sorry, what? I'm not paying for your purse. Probably, right? I mean, maybe you're super generous and you're like, sure, but that you'd probably draw a line somewhere.
Okay.
Like maybe you'd buy him a new outfit for speaking.
Yeah. Does that count?
Yeah, we usually allow that.
Okay, I have a lot of things to write off then.
Yeah. Now, I mean, there has to be some lines drawn, so it can't be like every time you buy clothes. For example,
No.
entrepreneurs, we're in. It's tricky because the IRS is so outdated. Like tax law does not address the the personal branding and influencer lives that we all live as entrepreneurs these days. Like
Okay.
if you're an entrepreneur, you have a personal brand going, you're showing up on social media all the time. And so we'd like to think like, okay, our presence, like anytime we do our hair, anytime we buy our clothes, anytime we buy makeup, should be a write-off because I have to show up and be the face of my brand. But that's not actually how the IRS sees it.
Mm.
And there's this famous court case where a news broadcaster who's on televised TV in front of millions was trying to write off her outfits, and the IRS denied it. And so if they're not going to let her, and she's in front of millions, and we're all in front of a couple hundred people that watch her Instagram stories, like, no. No, but for like a branded photo shoot where you're buying brand clothes for a specific photo shoot and you're going out of your way to find the right colors that you otherwise would probably not buy. Yeah, something like that is totally allowed.
Oh, okay, good. So that's helpful to know. I'm definitely going to send this episode to my friend and be like, girl, you are not trying to have me. I'm not trying to be arrested by the IRS or audited. I will not be right. You shouldn't either. Do not write this. Anyways, all that to, okay. So I want to know, okay, what are 5 things that are absolutely a write-off in your business? And what are 5 things that are not a write-off? Like that's like a misconception that you would think is a write-off in your business and it's not.
Okay,
let's
but
start on the
Akua,
first
my
10.
brain goes to, this is like the typical accountant answer is always, it depends. Like,
Okay.
that's an accountant's answer for everything. It depends. Because I could tell you for sure, like, I'm trying to think of something that's for sure. I'm just going to say like office supplies.
Yes.
For sure, business write-off.
Mm-hmm.
But there's going to be some people who are like unnecessarily buying office supplies who I'd be like, no, stop. That's not a write-off. Just because you have a home office and you're buying like loads of paper, but then you're using them personally or your toddler's taking them to do her art on them all the time. Like, no, that's not a write-off anymore.
Mm-hmm. Yeah.
So I don't know. Sometimes it's hard for me to see taxes in black and white because it's such a gray area. Yeah, it's always going to be, it depends. So really what I'd like to say is on this matter is if you buy something that you otherwise would not buy if you weren't an entrepreneur, it's a write-off.
It's a write-off.
Yeah.
Okay.
Now, think of this, that there's one thing that makes this more complicated, and that is you have to put yourself in the mind of like being an employee too. So for example, you going to this event to speak. If you had an employer who told you, hey, I want to fly you out so you can speak at this event, would you still try to find a cute outfit to go on stage with? Absolutely. Would you maybe still look at purses? Yeah, absolutely. All of those things. Well, now that shows you it's actually a personal expense, not that you're doing it because you are the entrepreneur.
Mm-hmm.
Does that make sense, that distinction?
It makes a lot of sense, yes. Because now I'm thinking of like, I can't be a write-off, Akua. Like things in my mind already in certain things. But I think that's important, you know what I mean? Because there's been times my tax guy's he's like, Akua, that is not a write-off. And I'm like, Matt, in my mind it is, so it should count. You know what I mean? Yeah. And so like, I think that's just such a good distinction of like, if this is something that you would purchase as an entrepreneur, and it's something, and if you weren't an entrepreneur, you wouldn't purchase it. That I think is such a great distinction for business owners to decide of like, to where it's clear for them of like, is this a tax write-off? Is it not? And I think again, to your point of like, truly, it really, entrepreneurship isn't black and white, and neither is the IRS. And so therefore I think it's just like a good point of like each situation. And so, I love that you just shared that. I think again, that distinction is just so important. Like, so now for me, I'm even thinking, I'm like, oh, okay. Like it just clicked. I'm like, I would never buy this if I wasn't an entrepreneur, you know what I mean? So yes.
Okay, but let's go through. I know your listeners are like, okay, Dawn, but just spit out some examples for us.
Yes, spit out some examples. Yes, let's do the first 5 of like, tax write-off.
these are probably a tax write-off, but still it depends, because I'm going to put in that sentence there. And
Yep.
things like, okay, we said office expenses, office supplies, education, that's a big one.
Mm-hmm.
Marketing, business travel, employees, contractors, hiring a team, those types of things. Your home office, business use of your cell phone, that's a big one. All of us are using our cell phone these days for business, so
Mm-hmm.
let your business reimburse you for part of that expense. There's going to be lots of subscriptions and software expenses that you have as an
Mm-hmm.
entrepreneur. Those are all write-offs. Yeah. Is that a decent enough list?
That's a decent enough list. Okay. I know it depends, but what are some crazy things that you have seen that you're like, that's not a write-off?
Yeah. So clothes are a big one. And the clothes is going to go back to, it depends.
Mm-hmm.
So for the most part, clothes tend not to be a write-off. But for special events or circumstances, especially if it's clothes that you're like, I wouldn't wear this outside of this thing for business, then boom, write-off. But if
Mm-hmm.
it's like, ooh, this is so cute and I'm going to wear this all the time, can I write this off underneath my business?
No.
No. Nice
Mm-hmm.
try, but no. I mean, you can, but good luck if you're audited, I guess.
Yes. Yeah.
Clothes is a big one. Personal hygiene, like doing your hair, makeup, nails,
Mm-hmm.
typically also not a write-off. However, if it's a one-time thing, like you're getting your hair done for a photo shoot, and by done I mean styled, you're getting hair styled,
Mm-hmm.
not like you're getting highlights or you're getting extensions put in, because that's going to last you months and months.
Mm-hmm.
It's, I'm getting my hair styled for this photo shoot. Now it's a write-off, but I'm
Mm-hmm.
getting my hair done with color, extensions, whatever. That's a personal expense.
Mm-hmm.
Um, Nails also tend to be a personal expense. However, there are times you can write that off on your business. We work with a lot of hairstylists, and they
Mm-hmm.
use longer nails to help them be more efficient when they do. Like, it's like a tool to them to have these
Mm-hmm.
long nails when they're doing people's hair.
Mm-hmm.
And so in their case, yeah, now it becomes a write-off, but that's
A
rare and that's
very,
unique.
yes.
It's
Yep.
very
Mm-hmm.
niche.
Yeah.
So there's not many things that you could say like, okay, it's never a write-off, because it just depends on the niche circumstances
Yep.
of the business.
Okay.
Um, yeah.
Okay. Great. I think that's really helpful. I think, again, that distinction of like one-time use, like if you're purchasing this
Mhm.
for a specific part of your business, whether that be a brand shoot or even men too, like if you're, going to purchase a specific outfit, like whatever
Yep.
it is, or a haircut, and if it's for this specific event, then that can count as write-off. But if you're going to wear these things and like afterward multiple times, then it's not a write-off. And so I just love, again, that distinction. And then also thinking of yourself, like if you had an employer, you would be like, absolutely not. So then putting yourself in that shoes of like, okay. And I think if anything, it just gives us parameters and much more knowledge because of what we can and can't write off as business owners.
Absolutely, absolutely. Because the IRS definition when it comes to write-offs is it has to be ordinary and necessary. And what it comes down to is just us doing exactly what you were doing, is
Mm-hmm.
kind of making a case for each write-off that we have of like, well, here's why it's a business expense.
Mm-hmm.
And it seems like wrong that we're doing that with a big thing like taxes, of just building cases, but that's all the IRS has given us. That's all we're
Mm-hmm.
expected to do, is case by case. Is it ordinary? Is it necessary? And a great distinguisher to that is, would I buy this for my employee? Even if you don't have an employee, think about that.
Mm-hmm.
Would I
Yeah.
buy this for my employee? Now, once you have employees, like I have quite a few, it makes it even harder. Like, I hardly write off anything for myself because I have 20 employees. And I'm
Employees.
like,
Yeah.
I don't think I'd write this off for all 20 of them. So probably shouldn't do it for myself.
Yeah. Oh my gosh, this has been so helpful. Okay, so question I want to ask you is, what are 3 things business owners need to do to prepare for this year's tax season 2025?
Yeah. Okay. bookkeeping is the first thing that comes to mind. Get
Mm-hmm.
your books in order. A lot of people stress out about tax season more than they need to because they try to do all of their bookkeeping and all of their taxes in the same breath.
Mm.
Mm-mm. Spread out the bookkeeping. Do the bookkeeping all year long if you can. If not, get your bookkeeping in order now. And then talk to an accountant as soon as possible. In fact, if you're listening to this and you still haven't hired an accountant, you're a little late to the game. Expect to
Mm-hmm.
file an extension. Extensions are not bad though. In fact, I'm under the belief that extensions are good and positive.
Mm-hmm.
There's less of an audit risk if you file extensions, so we like them.
Okay.
Yeah, fun tip.
Yeah.
But hire an accountant. Be picky about the accountant that you hire. Make sure you like them and you're not just like settling. We see that a lot with accountants. That's why I have to say it multiple times on this episode.
Mm-hmm.
um, and then get all of your tax documents nice and organized for your accountant. Put it all, I love saving it on a desktop, just having one file for tax documents where you save your tax paperwork, you save a copy of your taxes to that once it's done. But get organized with all of your paperwork.
Those are such
Yeah.
key things. And they're really simple too. But I think again, like because like taxes aren't the fun part of our business, it's so important though, because it's gonna make the whole process smooth. And that's what I mean, I have QuickBooks, but my tax person like set it up for me and showed me how to use it to where I can do my bookkeeping. And so and it integrates perfectly with my HoneyBook account, which I love. And so like for business owners, like I always set time and you could do it weekly, whatever. I set time once a month and I go through all of my transactions and then I like, and now it can automatically do it for you. But sometimes I always go in there to check to make sure that it went into the right bucket. And then
Mm-hmm.
also to make changes in case it's incorrect, but also there's also ones that it'll like flag of like, is this in the right spot or is that not? So always making sure that, you are taking the time. And like I said, I do mine once a month, just to double check to make sure that everything is smooth because it really does make a difference because then he like is able to go in there and grab
Yeah.
everything that he needs for my taxes every year. So a lot of the times like it's so smooth. And then he emails me like your taxes are ready. And if he needs something else from me, he lets me know. But like, I'm like, oh, thank you.
I know when it comes to taxes in your situation, because you're already doing the bookkeeping, taxes are pretty streamlined and simple, right?
Yep.
Yeah,
Mm-hmm.
and the only hard part is when he tells you have to pay something and then you have to be like, oh, gulp. Okay, let me go
Yeah.
pay it.
Yeah. Yes. Yeah. But I think again, to your point of like organization is key, having systems in place to make sure that you're on top of things is really going to make a difference in your taxing experience every single year. So again, like really getting that support because he's the one that taught me how to do that because they can also teach you things so that it makes it easier for them to be able to do your taxes. And so those are things that I just don't, want business owners to forget. So I have one more question. I've heard a lot about high yield savings account. Does that, number one, can you explain what that is for our audience? Because I think it's important for business owners to know. Because I recently, a couple months ago, I opened one. But two, does that help at all with taxes or no? Is that a completely separate thing?
It is a completely separate thing because high yield savings accounts are more so like you're making money off of
Mm-hmm.
your savings, but goes back to our conversation of, hey, let's look at how we can make more money. And a high yield
Yes.
savings account is a great response to that. So the difference between a high yield savings account and a typical business savings account or typical savings account is the high yield savings account just has a higher interest to it.
Mm-hmm.
It's a no-brainer. I think everyone should have high-yield savings accounts. I don't know why anyone uses normal savings accounts. Well, I do. It's because that's the default. When you open a bank account, they give you a
Yep.
normal savings account. And in order to have a high yield, you have to go through one extra hurdle to jump through. But like jump through that hurdle,
Mm-hmm.
it's worth it. And it just means that you're making more money off of your savings. So I love that you have a high yield savings accounts. I think that's great. We recommend everyone put their tax savings into a high yield savings account. So like every month when you're setting aside money for taxes, or you said HoneyBook is constantly taking out that tax, put that in a high yield savings account so that
Nice.
it's making you money before you go have to turn it over to the IRS.
Yes. Oh my gosh, that's such a great idea. I love that tip. And again, business owners, make it like take that extra step to get a high, because I think again, to your point, it is separate from taxes, but like you said, right, if you're looking for other ways to make more money, building wealth in your business,
Yeah.
that's like a key foundational step that you can take immediately. And then that's brilliant. I didn't even think of that, like putting your tax savings in there so that it's collecting money. And then like, again, like you feel more confident and you're like, okay, like I got a little something, something left over. You know what I mean? Like, I think those
Mhm.
are such like it's doable. Those are
Yeah,
really simple things that are very, very doable.
very. And like everyone, I don't know, everyone loves to showcase like affiliate marketing and income of like, oh, I'm making pennies on the dollar for being an affiliate for this place or whatever. I personally, I'm like, I have very little affiliate income. I make more money off of my high yield savings account than I do affiliate income. And yet no one's talking about how amazing that is. So I love that you brought it up. Yeah, I love it.
Yeah. Okay. So then really quick to even add on to that, what are some things that business owners should look for when trying to determine their like what high yield savings account to go for?
Yeah. The biggest thing is some banks have minimums of like you have to have this much money in your savings.
Mhm.
Um, if you're using your savings account just for taxes, you're gonna put money aside in it and then take it all out to pay taxes.
Mhm.
So you wouldn't want to have a minimum. Um, and then the other thing is some banks have annual fees. Yeah, let's see, minimums, annual fees, and then what is the interest rate? Those are kind of the three things that you're going to look for.
Okay. Super helpful. Okay, you guys, if you are looking like make this a priority to get a high yield savings account.
Yeah.
I have loved this conversation so much, Dawn. Number one, I have enjoyed talking about taxes and money and what I can and can't do. Thank you for that reminder. Thank you for that reminder. All right, so now we're gonna hop into these rapid fires, and y'all, I don't have any at the top of my head. Well, I don't know. We're just gonna go with it. So let's see how it goes. Okay, so S corp, LLC, or sole proprietor, which is best?
LLC.
Okay, why?
Okay, LLC is just the legal designation, and then from there you can decide uh, be a sole proprietorship when you're not earning, when you're under that $60,000 benchmark we talked about, or
Mhm.
once you get over that, then you can easily convert to an S corp. So LLC because you can be either of the other two.
Okay, okay, okay. I love that. The craziest tax story, like craziest tax story you've ever had.
Okay, well, I've had multiple of these, but they're crazy every time. And it's someone who comes to us who hasn't filed in like 20 plus years. We've had multiple of them. And it
Oh my gosh.
like
So
20, I'm
so
not
what do you do?
exaggerating.
I know. I'm like, what? Okay, so walk us through one of these and what did you do? What happened? Like what does that look
Yeah.
like?
Yeah. Well, normally they are like trying to buy a house or something. They're like, ugh, I finally have to do my taxes. But the IRS hasn't caught on that they're making money under the table. So they haven't filed anything. And the IRS, you only need to file the past 7 years. Like once it's past 7 years, they can't collect or do anything.
Mhm.
So really, we just go back 7 years of bank records and we remake the whole thing. We remake their income and their expenses and we file tax returns. And it is so hard because, as you can imagine, someone who hasn't filed taxes in 20 years, they're not great at keeping records.
Mhm.
And they do not want to file their taxes. So they are dragging their feet. They're hating every step of it. You're just trying to be their cheerleader because you know that they need this. But yeah, that's. Mm-hmm.
Ooh,
Mm-hmm.
that was spicy. I was like, I had no idea that. Yeah, I mean, I was like, oh, and they're still walking these streets after not filing for 20 years, but kudos to
Here's
them.
here's the thing. Entrepreneurs need to hear this. We are all, every single person listening to this podcast is way too small of a fish. Like the IRS does not care about us, okay?
Mm,
They're not going to come after us. They do not have the resources or the time or the money to come knocking on our door and care about us. If you make a mistake, they probably won't even notice, okay?
mhm.
So, like, don't fear the IRS. Just focus on you and your business and try to do the best part with filing your taxes. But yeah, if they're not coming after these people who haven't filed in 20 years, they're not going to come after you for writing off a purse.
I know. And all of a sudden, I just got purse after purse. I'm just kidding. I would never. But no, I think that is such a good reminder of like, again, like the IRS is not that scary.
Yeah.
And so, Yeah. Okay, another question, rapid fire. What is the most amount of money you have saved for a client?
I don't even know this answer. Over
Mm.
50,000.
Okay, that's solid. That's a solid number though. Okay.
Cool.
So when you do right, y'all, you can get almost $50,000 saved. So, all right, last rapid fire question. What is the one thing you love most about your job?
The people I work with.
Mm, love
Yeah.
that. Kept it short and sweet. Okay, so
Mhm.
this was a fun rapid fire, a little spicy. Okay, so every question that we love to end every single episode with is, what does having an unbreakable business mean to you?
To me, it means having an aligned business. Like
Mm,
having a business that you don't have to take a break from because it's just integrated. It's part of who you are. It fits your lifestyle. It's aligned to you and your life, and it's not draining. You've set up systems and
mm.
processes. You've set up offers that are life giving. So that's unbreakable to me.
Ah, I love that so much. Creating a business that aligns with you, your spirit, your heart, your soul. I think that's just so, so important because again, it brings you joy. It keeps, because that's when you're doing something that brings you joy, that's what's going to keep you going. That's what's going to help you
Mhm.
create a sustainable business. And so
Yeah.
I think that's such an important reminder. So thank you so much. And Dawn, I've loved this conversation. This has been fun.
Yay.
Yes. So no, this was great. And so for our audience that want to be able to connect with you, where can they find you? How can we support you?
Yes. Okay. Come hang out with me on Instagram first and foremost. My handle's Patton.accounting, or come to our website. It's pattonaccounting.net. My name's Dawn Patton, hence the name Patton Accounting. I know, kind of a boring firm name, but here we are. Don't forget the name. Come see me and hop in my DMs and say hi.
Oh my gosh, 1000%. Also, I feel like patent accounting, it's very on brand. Like it feels very aligned with like taxes and money and all that stuff. So I'm digging it.
It makes sense, right? Yeah. I
Yeah,
mean,
yeah.
yeah.
It,
It
ma-
sounds like it fits into the accounting world.
it does. It really does. So I love it. It's easy to remember. And so, Dawn, thank you. Thank you so much for being here. And for all those listening, until next time. Thank you so much for tapping in today's episode on the Unbreakable Business podcast. And if you enjoyed today's episode, make sure to like and subscribe. Do not forget to download our free tax filing checklist to help you get prepared and organized for tax season. And I will see you next time.